Hi, it's Peter Temple for March 28th, 2016 with the market report for this week. This probably isn't going to be a big report because I think we've pretty well done this wave to death. It just seems like we've been working on it forever. And I know there are a lot of people that are equating this with some of the other waves and setting up the number of days, and we should be done fairly soon or a few days ago. So I just wanted to start with the big picture and show you where we're at and a couple of caveats to what I'm going to say. Of course, we had the top of the market way up here, and we had what I'm labeling as a first wave down. And because I saw at the time the structure of this wave, it looked like a clean 5 down to me, because this last wave is always a long fifth wave. But it is questionable, and if you look at it, it sort of looks like a wave in 3. So that's one caveat. Then we have this ABC up, and this was we thought a flat, which would be 3 waves up, 3 waves down, and 5 waves up. We were expecting that, but this fifth wave, of course, didn't make it up here, and I've actually labeled this 5 question mark, and this could be a truncation. So whether this is a truncation of just this wave or it would have gone to a new high, I'm not sure. It could have been a truncation for either one. And maybe it isn't a truncation, because without the truncation, this looks like 3 waves down. So those are the caveats we're working with, and so it's, boy, the most difficult market I've ever seen to try and call. It's doing all kinds of strange things. But I am calling it a bear market. And we have, because I've got to call it something. As a trader, you need to know whether we're going up or down, and we need to know when we're wrong. So what I'm doing is saying, okay, it's going down, and this is the level here, 1900 in the S&P 500, where we're actually going to be wrong. So what we have here is a second wave, and believe me, second waves, when you have a bear market like this, are always like this. They are very long, they stay up here forever. I just hate them, and there's not much you can do about it. So here's the 62% line. This is the 62% from here to the bottom. And it just, that once it passes this going up, then it is a second wave. All of the indices now have done that, except actually as I looked around, I found that the Dow transports haven't. It looks like they've done a first wave down configuration here, and that looks motive, but it just needs one more little wave up to be able to hit this 62% level, and then it should be back on the way down again, and that would take it into a third wave. So I think that's one of the things we're possibly waiting for. So let's get back to our SPX, and we have this second wave, which is then going to head down, and I believe it's going to be a third wave. So there is an alternative to this, and I've got a separate video that I've done up, which I will put into the post, and it shows what the alternative would be. And the alternative really calls for this wave coming down as a second wave here, and then heading up as a third wave, and then we'd have a fourth wave and a fifth wave. But if it does that, it has to come down to this 62% level of this wave, and that's at 1900. So this is the do or die level. If it comes down in 3 waves and hits this level, well, that is something we really have to watch for, and it may mean, I'll look at it at the time, that we're going to head up in this third wave. But I believe it's going to go right down past that, and what we're looking for is 5 waves here, and it may still be in the third wave when it comes down. So it may be questionable, but if we tear through this level and keep heading down, then we're into a third wave. Here's a 10-minute chart of the S&P 500, so we're zoomed in quite a bit, and this is the top of the second wave. And I want to concentrate on what we've seen recently. So we had, after our large fourth wave here, this is the fifth wave we're in now, and we're seeing a first wave of that fifth, second wave down, third wave up, which I've now sort of relabeled this in the last few days because I had thought this was the third and we were going into a fifth, but as it turns out, we've done this what appears to be an ending diagonal, and it isn't the top, so we've made this the third wave of this fifth wave up, and we're looking now, we've come down in 3 waves here, went past what we thought would have been a larger ending diagonal, so that part is dead. and we've come down here in an ABC, and that's our fourth wave, and we have one more wave up to do in a fifth wave. Now it's interesting to see what's happening with this, because there's nothing really wrong with this doing 5 waves, but the configuration sort of reminds me of a triangle, and we may in fact get a triangle. Triangle, of course, is always the last, we have a number of patterns, is always the last pattern in a sequence, and it forecasts that the final wave up isn't going to be that long, and it is the final wave. So rather than this being an ending diagonal in 5, it ended up being in 3, 4, and if this takes us into the pattern of a fourth wave, we're probably going to be up here for another few days till the end of next week, and that's looking like April Fool's actually is the Friday of next week, and we're just going to have to see what happens with this. But this is definitely a fourth wave because it came down in 3, and it can't turn into a first wave, and I'm going to show you that in just a second. So we do have a little bit more time up here, and then we're going to turn over. I just want to spend a few minutes or a couple of minutes in the weeds here looking at the 3-minute chart of the S&P to look at this wave down, just to give you an idea of why I said this is an ABC down and that it can't become a first wave. We came down here and there was no second wave. There really needs to be a second wave that juts out here, and it needs to, if you were to measure it, be 62% from the top. It needs to be the top of it. So it needs to come down in 5, go up in 3, and be 62%. This is way down, I think, under 38%, something like 23%. So we've got what appears to be sort of a 1, 4, and then we've got this extra wave down here, which you could say was an ending diagonal. But here's the other big one, is that, it appears there's a second wave here. This would be a double 4, or it could be, it has to be a double 4, so it'd be a fourth wave. But there's no second wave of the fifth. There's a little tiny thing, but it's not big enough, and it means if it was a true second wave, this fourth wave makes the third wave very, very small. In fact, it's way too small. So, and there's no fifth wave down here. Well, there's a fifth wave, but there's no sort of fourth wave of the fifth, so it doesn't quite make it. It has to be an ABC wave. This wave up has gone up in 3 waves here, and if you look at the entire thing, it's in 3 waves so far, and that's why I'm looking at this as possibly being a triangle, which would then probably do a larger B wave now, and then head up into the C wave, and then we're going to be in 3 waves of 3 for the rest of the triangle. And I'll take you through that as it unfolds, because I'm not sure where this is going right now, but it seems to me that a triangle is probably in order. Boy, anything to keep us up here a little bit longer. The market loves to do that. So I'm sort of calling for a triangle, and we'll see how that does. Here's the daily chart of the Euro US dollar, and I watched this quite closely because for the longest time, probably about 8 months, it was moving inversely to the US equities. And that meant that it would have headed up the way it was going, and these were all look like motive waves here. It was going to head up into this above the 38% level, into what I would consider would be a second wave, or at least to get to the 38% level, because it didn't quite make it here in the retrace. And when you have a fourth wave, fourth waves always go up to the previous fourth or the 38% retrace level. Well, it's only been recently last week that it turned on me and didn't do 5 waves up as to what I expected. It actually only did 3 waves up here. So I'm now calling this a triangle because that's what it looks like, and it is a complete triangle and should now head down. So we have a major turning point here, and that's interesting with what the US equities are doing. So it seems to have changed direction in the last few days. Here's a closer look at the triangle pattern. This is actually the 2-hour chart of the Euro US dollar currency pair, and you can see that I've labeled the C, D, and E, and the E is the last leg of the triangle. So this is done and it should head down. But this wave here does not look motive, and in fact looks like it's going to probably finish up here, because these waves now in the euro are moving in tandem in the same direction, it appears, as the US market. So what it looks like to me is going to happen is we are actually going to retrace here and do a double top because this is not motive. And at that point, the US equities should head back down. I'm seeing the same thing in the US dollar CAD. And let's just go to that chart for a sec. Here's a 2-hour chart of the US dollar Canadian dollar pair, currency pair. And you can see that we're in a fifth wave here. And it's done 1, 2, 3, 4, 5. So it's finished this wave, but we've got 5 waves, what appears to be 5 waves up. It certainly measures out correctly. So this wave is going to probably backtrack to either 62% or it's going to come down here and do a double bottom and then head up. And I would say that because of the upside down way this chart, because it's the US dollar CAD and the euro is the euro US dollar, so they're actually reverse charts to each other. So if this comes down and the euro goes up, they will be moving in tandem. So I would see that when we either get to 62% or the bottom here, you're going to see each of them turn, and you're probably going to see the US equities turn. And that's going to be a really great signal because we look like we're at a major inflection point for all the US dollar currencies and for the US equities all at the same time. And I've been saying for quite a long time that I've been seeing the currencies moving with the equities in lockstep. And that still appears to be happening, but the euro has changed direction. So that's really interesting. So this is going to be an interesting week to see exactly what happens, but we should have a turnover either towards the end of the week or the beginning of next week. It's not going to be that much longer. Great trading.